In the rapidly evolving landscape of blockchain technology, one name has been generating a quiet buzz: Solana. In this ever-changing cycle of blockchain main chains, Solana is poised to emerge as a game-changer. The key to their potential dominance lies in an upcoming release known as Fire Dancer or Jumpers, a unique validator set to revolutionize the industry. What truly set it apart is its extraordinary transaction processing speed, expected to soar to an astonishing 600,000 to 1.2 million transactions per second. To put this in perspective, Solana's speed is a staggering 10 times faster than any other blockchain network seen to date. But that's not the only reason Solana is turning heads. It's the fact that Solana is not just another layer on an existing blockchain, it's the blockchain itself. Designed by experts at Jump Trading, who are well versed in the demands of high-frequency trading, Solana is engineered to meet the stringent requirements of low latency and immense capacity, making it a potential cornerstone for the future of finance. In this exploration, we delve into the reasons behind Solana's rise and what it could mean for the blockchain and financial worlds. In his latest update on the cryptocurrency market, Raul Pal, the founder and CEO of Vision, shares his insights and predictions for 2024, a year he anticipates to be a massive bull market for cryptocurrencies. According to Pal, the United States economy is showing signs of slowing down, but this economic slowdown doesn't necessarily mean that cryptocurrencies prices will drop further. Pal believes that the market has already factored in this slowdown from the previous year, and he doesn't expect significant declines in crypto assets prices for the remainder of the year. Furthermore, Pal expresses optimism about the transition from what he calls crypto spring to crypto summer. He believes that this transition has already begun, and by Q1 or Q2 of 2024, a full-blown bull market in the cryptocurrencies and technology can be expected. Pal emphasizes that the current price movements in the crypto market are typical of a crypto spring where prices can fluctuate. He advises investors to take a step back and look at the bigger picture. In Pal's view, the bigger picture is the progress that the cryptocurrency and digital assets industry has made this year. Despite the current price of Bitcoin at around $27,000 up to $66 for the year, Ethereum's 37.1 year-to-date increase, and the promising performance of Solana, which Pal predicts to be a significant player in the next bull market, there are positive indicators for the coming months. Pal also discusses the potential catalyst for the next bull run, highlighting Bitcoin spot exchange-traded funds or ETFs and Ethereum's future ETFs as key factors. He mentions the example of VanEck, an institutional financial firm set to launch the VanEck Ether Strategy ETF, which invests in Ethereum futures contracts. VanEck, with over $77 billion in assets under management, plans to donate 10% of its profit from this venture to support Ethereum core developers over a decade. Raul emphasizes the crucial role of institutional interest in the current cryptocurrency landscape. He explained that while the cryptocurrency economy boasts groundbreaking technology, it requires a substantial infusion of capital, the kind of financial backing that cannot solely from the retail investor, many of whom have already heavily invested in the crypto space. Raul believes that what the cryptocurrency space truly needs is fresh capital from major institutional players and their affluent clients. This is precisely the support he envisions coming from the significant institutional interest that is now manifesting in the cryptocurrency arena. Additionally, these institutions are expected to drive significant investments in the cryptocurrency venture capital VC projects, which in turn will fund the next wave of projects necessary for the industry's further growth. Furthermore, Raul predicts that as the border economy experiences a slowdown, the Federal Reserve or FED may be compelled to lower interest rates. This, in turn, could trigger a surge in asset prices, particularly in the stock market. As the stock markets approach all-time highs, Raul anticipates that more investors, both institutional and retail, will be incentivized to explore riskier assets, including cryptocurrencies and other digital assets. In light of these developments, Raul foresees a substantial increase in institutional participation in the cryptocurrency market during this cycle compared to the previous one. As significant capital flows in the crypto market, Raul identifies certain cryptocurrencies that he expects to experience exponential growth. However, the specific cryptocurrencies he predicts will rise significantly are not mentioned. In the next crypto bull market, there are a couple standout narratives that could make headlines. One of these focuses on Layer 2 scaling solutions, which aim to make blockchain transactions more affordable and faster. Solutions like Polygon and Arbitrum are gaining traction and are expected to continue to do so, particularly due to their ability to batch transactions, effectively optimizing Ethereum's capacity. Moreover, there's growing interest in various sectors within the crypto space, including gaming, zero-knowledge technology, and decentralized finance or DeFi. While it's challenging to predict which area will dominate, these sectors are showing promising signs of growth. As for price expectations, it's essential to exercise caution because crypto markets can be highly volatile. However, if Ethereum follows a similar trajectory to Bitcoin during the previous cycle, reaching $15,000 per token doesn't sound unreasonable. Bitcoin may experience slightly slower growth due to its more mature ecosystem, while Solana could see significantly more substantial gains. Overall, the crypto market as a whole could potentially grow from its current trillion-dollar valuation to around $10 trillion at the peak of the next cycle, driven by increasing adoption of blockchain technology for various use cases. Raul expresses a strong belief that at least one application for a spot Bitcoin ETF could potentially be approved by the US Securities and Exchange Commission or SEC later this year, possibly as early as November. He suggests that the regulatory environment is ripe for such an approval and that is a matter of the official processes being completed. Now, let's address the questions in this video. Number 1, do you agree that we could get a spot Bitcoin ETF approval this year? The possibility of a spot Bitcoin ETF approval is certainly a topic of great interest and speculation within the crypto community. The SEC has been reviewing various ETF proposals for some time, and while there's no certainty about the exact timeline, there is optimism among some market participants that approval could happen in the near future. However, it's crucial to remember that regulatory decisions can be unpredictable and the timing of approval remains uncertain. Number 2, how do you think such news will impact crypto asset prices and general sentiments about the industry? The approval of spot Bitcoin ETF by the SEC could have significant implications for the crypto market. Here's how it might impact prices and sentiment. First, price impact. The approval of Bitcoin ETF could lead to increased demand for Bitcoin from institutional and retail investors who prefer the convenience of ETFs over directly holding and managing cryptocurrencies. This increased demand could potentially drive up the price of Bitcoin. Second, sentiment. Approval of a Bitcoin ETF could boost confidence in the legitimacy of cryptocurrencies and blockchain technologies among mainstream investors. It could also signal a more favorable stance from regulators, potentially attracting more institutional investors in the crypto space. Lastly, market growth. The availability of a Bitcoin ETF could make it easier for traditional investors to gain exposure to the crypto market, potentially leading to increased market capitalization. However, it's important to note that the actual impact on prices and sentiment will depend on various factors, including the specific terms and conditions of approved ETF, market conditions at the time of approval, and the broader economic factors. As with any investment, it's crucial for investors to conduct thorough research, consider their risk tolerance, and stay informed about regulatory developments. That's it for today's discussion on the potential approval of a spot Bitcoin ETF and its impact on the crypto market. We'd love to hear your thoughts and insights in the comment section below. Don't forget to hit that like button, subscribe to our channel, and turn on notifications so you won't miss any future updates and discussion. Thanks for tuning in, and we'll see you in the next video.